Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Jennifer Grancio, CEO of Engine Number One, to discuss the decarbonization economy as well as supply chain transformation. Jennifer, it's great to have you with us. Welcome to MarketSite. Welcome to Trade Talks. Let's talk about the opportunity that the energy transition is providing to investors right now.
Yeah, thank you. The energy transition is enormous, and so sometimes we think of it as it's a transition and it will happen very quickly, or people think about energy transition just means green, and neither of those things are true. You know, effectively, from a consumer perspective, we're demanding different sources of energy. We want to drive battery electric vehicles. We want the electrification of everything, and what that means is we have a huge amount of investment to make in actually moving through that transformation. It's probably $4 or $5 trillion a year are getting invested in this.
Is there a difference between decarbonization and net zero? How do you truly get to net zero? I mean, think about it. When you fly on an airplane, we're all traveling again now that COVID is over. There's emissions from that.
Yeah, we think about it as how do you actually hold the big emitters and profit as an investor as the economy moves over time. It's not going to happen overnight, but as the economy moves towards net zero. And so if you look at the way we use energy today, but also if you look at cars will move from internal combustion to battery electric vehicles. Airplanes, which are in our portfolio, we run two strategies today, Net Z, and the other strategy around supply chain is SUP, S-U-P-P. In Net Z, we hold cars so that you can make money in the transition to BEV. We hold airplanes because the new planes are 15 to 20% more efficient. And so from a value creation perspective, holding these old economy emitters, and we make a decision for you as an active manager on which ones win through time as we move towards net zero.
Realistically, how long do you think it will take to get to net zero? I know there's a number of mandates that have been in place through different global governments. How long do you think it realistically takes place? And will we ever divorce ourselves from traditional energy supplies? Don't we need some of that to get there?
We definitely need some of that to get there, which is why we talk about it as a long-term transition and transformation. It's not going to happen overnight, and it's probably many years from now. Probably it's 7 or 10 years from now. But if you think about public companies need to have smart strategies to take advantage of the fact that it's not never, it's coming, it's happening, and from a scale perspective, if you want to move to all battery electric cars, we need companies like GM to produce them at scale. We need to figure out how we source minerals, which we're very short on, to support an all-electric future. And so while the investment opportunity is a very long-term investment opportunity that plays out over 10 years, now is a good time to get in so that you don't miss early winners and early performance.
Right. Well, of course, too, I mean, we need the infrastructure to support the EV market. That's part of it, too. You can produce as many cars as you want and make them less expensive because they'll be available at scale, but you need to be able to get to point A to point B. So there's certainly opportunities in the infrastructure space, I would imagine.
Huge opportunities.
Let's talk about supply chain transformation. Where are the opportunities there?
So from a supply chain perspective, if you think about what we've done since really World War II, we lost a huge number of manufacturing jobs from the US. We moved everything, we made the bolts one time, and we made it very, very far away, but then we tried to build a car or a tractor in the US. And what happened during COVID is it just all broke, it was too far away. So we already are seeing companies move manufacturing back onshore to the US. And additionally, with sort of concerns about national security, we're seeing mandates that are encouraging making chips and making high IP product in the US. And so it's already underway, and we think it's already time to be investing to this real reshoring of supply chains. And it's not just logistic companies, it's the railroads, it's the technology that goes in the factories. And there's a beautiful map of the US that lights up with all of these mega projects that are happening all over the US. And it's great for American competitiveness, and it's really great for blue-collar jobs in the US.
I mean, I see in your notes here over 350,000 this year alone. That's amazing. But it's, I also noticed the global supply chains, they focus on financial efficiency above all else. So there is a lot of opportunity as they make things more efficient and integrate newer technologies and so forth.
That's right, and it's a huge opportunity, and the scale is enormous. And so if you think about it from an investment perspective, this isn't one you want to wait and watch the trend. The trend's already happening, the scale is enormous. It's a great place from a portfolio perspective to be going after alpha now.
Right. All right, Jennifer, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.